What's going on, guys? How's everyone doing? Hey, Bob.
Hey, buddy.
How you doing?
All right.
Very good.
So what's on your mind for tonight?
My mind? I don't have much. Not much. My mom just got to town today, so she was meeting the baby.
Very good. We have any questions from folks?
Not yet. They're starting to trickle in.
All right. Yeah, I see a couple greetings there, Jeffrey and Sharesh.
Paul, do you want to share your screen? Reason being is because I may be going in and out. So if I got to leave, I'll just throw your screen up.
Sure.
All right. Yeah, we'll give everyone a couple more minutes to trickle in here. And if you guys have questions at this point, you can just put them in the YouTube or Twitter comments and we'll get to them. Yeah, business contacted BUSO.
Yeah, I think probably USO is probably the best way. Can you see my screen there?
Here.
If you want to go ahead and select my screen, I don't have control.
Oh, yeah, I'll get to it in a second.
Okay.
You may be able at the bottom. I don't know if you see the bottom panes at the bottom on StreamYard.
I do, but it's not highlighted that I can see. You're broadcasting your screen.
Oh, yeah, I know. But you may be able to like go over mine and select remove. I don't know if that shows up or not on your end.
It does not.
How do you read the web app? Well, that's a very broad question.
Well, let's do it for. Let's just go do it for USO, for instance.
Yeah, we can get to that in a second. I was just going to do some admin stuff at the beginning as well. All right, 8:03, we can get started. Couple things I wanted to announce really quick. First being, so we have in the dashboard, right, there's a new scanner tab. If you saw that this weekend, I've not had a chance to record a video yet, but I will do that tonight, and then we'll get that out. But it's very self-explanatory, right? There's two sections. There's the general scan. There's the wheel strategy. Both of those sync up to the Discord. So, obviously if you like the Discord and want to keep running it, go for it. But right, this was created just to make it a lot easier of use, bring it into the dashboard. You can run multiple scans at once. Right, they're all just embedded in here. So you can go through, select whatever you want, run the scan. Right, the results populate. You can add, different columns that you want. If there's other data columns, like in the spreadsheet that we don't have in here, happy to bring those in. Just a starting spot. You can still export to Excel, and you can now create a TradingView watch list. It gives you a text file. You just upload that to TradingView. Very simple. And then if you're a visual person, we have this scatter plot down here. So you can just zoom in to kind of whatever, quadrants you're interested in. Look at those names, right? Reset the zoom. You can expand that. You can expand this down here, all that good stuff. And if you go to the wheel strategy, it's going to be the same thing. Right, so you're gonna have those results here. You're gonna have the various scans that are lit up, right? There's the 4 scans of the criteria. So you'll see three of the 4 are here. That just means that the 4th scan didn't register anything. So that's the way you read that. And you have all the standard metrics that's presented in the spreadsheet as well. You can still present the spreadsheet, and away we go. So, hey guys, feel free to use that. Give us some feedback on, any, further iterations from me, right? This is version 1.0, so certainly can change. Don't think we have any other admin announcements right now. We're working on a volume dashboard. You guys have seen that. It's getting really close. right? That's all our kind of zero DT volume commands. Going to be a dashboard in the web app as well, right? 4 quad, you'll be able to see all the commands at once. So that should be getting close to production ready as well. So with that, right, just setting the scene really quick, and then we can get to the USO dashboard, SPX, right, gapping down a little bit this evening, right, 67.40. Looks like right now, right, last weekend's low was 67.10, so we're kind of flirting with that in the overnight session. Keep in mind it is the overnight session, so a lot can happen between now and the open on Monday. But this is the data we got right now, and we'll get all of our overnight updates tonight. Those will process in the morning and be ready by 7 a.m. and we can go from there. So with that, Paul, I will share your screen. If you guys have any questions, please pop them in the chat. And then Paul, do you have the market trend model up?
I do.
Yeah, I didn't have that up. So rather than trying the market trend model.
Yeah, I'll take it from here.
Okay.
So step one of everything we do before we get to the USO, it's always just kind of looking at, what's the overall market doing. We utilize something that's called the ARCX. It's the New York Stock Exchange, the NASDAQ, and the Amex. All their ticks are rolled into one signal. And this is where we left off on Friday. Actually, for the most part, last week, there was a lot of buying. I know we had a lot of volatility. Weakness in the morning, but we recovered generally, and people used it as a buy the dip type of event. So when you hear the talking heads talk about doom and gloom, we haven't really seen what I would call a dramatic sell-off, which is this white line. This is called the CT, or the cumulative tick. And we're expecting this thing to head south. We're expecting it to cut into areas that are represented here by this, what we call the ribbon. And although we were converging on Thursday, we actually saw a recovery on Friday. So not everybody is in panic mode. The market, for whatever reason, is broadly buying. And that's actually, we use something else called the USC, the US Composite. This green here is the RSP. That's the equal weight S&P 500. Sure, it's clearly the last 2 days, it's gapped down and done whatever it's doing. But you can see that the overall trend has been actually up here. It was down on Thursday, up on Friday, down on Thursday, up on Friday, up, kind of flat, up on Tuesday, Monday, up. It's pretty interesting, right? I know there's a lot of overnight gaps. Price is king, but from a zero DTE perspective, the CT is showing on a day-over-day basis that intraday buy the dip and things related to that. I suspect with futures the way they are tonight, let's just go take a look real quick. All right, huge gap down when futures open tonight. All right, so here's the ES right here, and it's gap down and it's headed south. 66.27 on the futures right now. Up here are the volatility futures, right? The VIX futures, and you can see that in aggregate we're headed north. We're printing in futures the 28.79 right now, and the VIX is 29.49. So we're probably going to open with a 30 handle tomorrow, which is going to be interesting just to see how it all plays out. All right. So what's the backdrop and what do we take away from that? We have mixed signals, really. I mean, we have mixed conditions. The market actually is buying the dip during the day session, but the volatility obviously is extremely high. So long options are probably not your best bet here. When volatility is high, IV is high, so implied volatility is high, and you don't want to necessarily be going long when that condition exists. You want to start thinking about what can I do short, and actually You want to take advantage of any form of collapse in implied volatility. We're not there yet. We're on that curve that's going up. So long options might work for a little bit of time, but we always come in. It's just a matter of when, given that they've announced a new supreme leader in Iran today, and oil is printing over $100 a barrel now. I suspect, for all intents and purposes, that we're going to see, we're up at 107 right now in the futures on oil. I suspect we're going to see a lot more volatility early this week, and we'll see what happens here. All right. Let me look down the chats here. All right. So Business Contact asked, what's the best way to track WTI? USO is one way to do it, and I've loaded that here. And this is our dashboard. What's interesting about the dashboard is that we can take a look at the option structure for whatever it is is the underlying in this particular case. We don't do futures or the options on the futures in here. But for the USO, we can load it and we can turn on all the expiries. So when I hit select all, we've got a very liquid instrument here. We've got 871,000 contracts, short interest corrected. This gold line is the closing level that we had on Friday, whatever the last print, not the close, excuse me, I misspoke. It's the whatever the last print was coming in. And you can see that there are some bubbles here. And so I know there was a question, Suresh was asking, how do we read this? Well, when I turn on all the expiries, right, I'm looking at kind of in aggregate, I'm taking all the spaghetti and I'm throwing it at the wall, right? And so this is really telling us how are people positioned within the overall structure. So when we take a look at this, you can see there are a couple bubbles here, right? There's a bubble in the call OI column. Let me make this a little larger so you can see it. Call OI column here. And you can also see there's a bubble over here. And if I go up and down, you can see there's a red or magenta bubble down here at 85. So what is it that we're specifically looking at? Oh yeah, there's a magenta one down here in the put OI column, all the way on down here at 68. Okay, so let's start over here on the right-hand side, just so we can get oriented on what we're looking at here. So the first thing that we're looking at when we just look at the open interest, remember now we're aggregating across all of the expiries. We're going to change that in a little bit, but I want to just we're asking the question. Everything here that the dashboard does is in response to a question. So we want to know, where have most of the market participants across all expiries placed their bullish bets? And people speculate with out-of-the-money options. So the out-of-the-money call options, the speculation is up here at 120, right? And then if we look down here, the downside speculation is at 68, okay? So this is telling you that across all those expiries, these are the strikes that contain the largest open interests for puts and calls. What's that do for you? Well, it helps you establish kind of how all the participants have landed, right? No one participant generally does this, but in the big picture of things, you can see in aggregate where things are at. Now, coincidentally, if we take a look right across over here on the left, you see another dot over here. This is where you have the maximum plus gamma, or call-centric gamma, for the complex. And it just so happens it's on the same spot as the COI. That isn't always call open interest. That isn't always the situation. But in this view, it is. And it's because of the proximity of where the gold line is. And so basically what this is telling us is that 120 is the point of maximum convexity as we go up that call-dominated curve, right? Now, why is that important? This is telling you the majority of participants across the board are seeking to ride that gamma curve upward, right? Now, why would they want to do that? As oil prices, as USO goes up, what's going to start happening is that you get a change in spot price. And that change in spot price changes delta in a disproportionate way. What's the disproportionate way? Gamma. That's what gamma is. Gamma is that curve where we add as price moves up the chain. Gamma is the additional amount of pricing as we go up. Now, why is that even important? This gold line, which represents, you can see over here, 112.50. If this gold line goes up to 120, we're going to be at the money for the 120s. What do we know about gamma? We know that gamma is maximum at the money or near the money. For all intents and purposes, it's at the money. For our discussion here tonight, we can say it's at the money. Most people, we have found, speculate with out of the money options, and when they hit that 50 delta, plus or minus, they take their money off the table. We would expect downside pressure as price hits COI and plus GEX. And then as they start monetizing, they're closing long deltas. And as they close those long deltas, that's going to make their book shorter, the dealer's book longer, and the dealer's going to have to sell to hedge flat. And that's going to put downward prices on USO. Now, USO is a funky beast because USO is tied to something. It's like the VIX. It's like other things where you have a direct measure of what's going on. Think GLD, think SLV, where you're tied to silver, you're tied to gold, you're tied to oil, these different commodities. So there's a pinning that goes in there that we're kind of hand waving away right now. But in general, the mechanics, this is telling us that for all the expiries, that 120 is where all of the aggregate of the folks have landed in USO. And we would expect as price goes up, we'd start to see some monetization as we get there. Now, there's a few things that are really, really interesting that we can do here. Over here, you can see this label called COTMC, and you see another label here called COTMP. These are the cumulative out of the money calls and puts. It's a balance. Think of a teeter-totter. And as we start going up that gamma chain or up that convex curve, once we start getting above, and you can see right here, 114, 115, right in this particular area, we have created this level to start indicating where the probability of monetization starts improving. And why would that be? Well, that's because you've got a lot of calls that are sitting up in this area. Now, these little numbers that are sitting over here, because the market makers open these up at a later date, and we haven't had a lot of folks sitting on top of them. But this is basically saying as prices get up over the 114, 115 in USO, as we start walking up the chain, there's a greater likelihood we're going to start seeing monetization. So the pieces all start to fit together now, right? We have an indication of a particular level. We would expect to see monetization starting to occur. Why do we care? Well, if you buy long 120s, right, and we never get there, you could end up into the expiries where you're out of the money and worthless, right? So if you're doing spreads, this can help you understand where would I want to put my long. I typically put my longs right at the money, and then I put my shorts right around the COTMC or the plus GEX level, whatever is closer. And I let theta help me walk up that curve if my thesis is positive on that. So this helps me kind of gauge where is the market likely to do something one way or the other. The COTMP is on the downside. Where do we start seeing support? And that support comes through monetization, but it's the other direction. The cumulative out of the money puts is where we start getting a balance as we start heading south. And I will say, just looking over here, there's not a lot of puts over here, right? But basically what this is telling us is that we're starting to see where the in the money puts and the out of the money puts start balancing. And why that's important here is that we could start to see closing of puts. And when we see closing of puts, we start to see support. And when we see that support, because we're effectively taking negative deltas off the table, that makes our book positive, the dealer's book more negative, and all things equal, the dealer has to buy to hedge flat, and that puts upward pressure on the stocks. That back and forth yin and yang that we see there is constantly in play here, and this is what we track here. So this is one way to look at the dashboard. Now, I promised you I was going to change the expiries. Now, why would we want to do something like that? I clicked over here and I'm going to select the top 25% of all of the open interest. Why that's important to us is that this starts, you can see how we've developed, we've gone from everything here, right, where everything is turned on and it's in various shades of strength, to where now I'm only going to look at the top 25%. Why is that important to us? What we have found, especially in the SPX, when you're trading 0DTE and the SPY and the Qs, of course, they're all in the same animal here. What we have found is that the 0DTE, 1DTE, 2DTE crowds tend to overwrite these weaker strikes with whatever action they're doing. Now, I don't see that in USO. We'll go over to the SPX here in a second. I don't see that in the USO, but this is telling us is that these strikes are the most dominant strikes. And it's kind of interesting. You've got most likely leaps sitting out here in January of 27. You've got some July, you've got some April, you've got some March monthlies. So these are the monthlies that are here. And then maybe not surprisingly, Fridays. Fridays are inherently the strongest of the weekly expiries. It's first Fridays, and then it goes to Mondays, and then Wednesdays, then Tuesdays, and Thursdays are the weakest. So here's Friday, here's the monthly, and then here's the July monthly. When we aggregate those together, does the picture change? Not really. It really doesn't. And if we look down here, I'm going to make the screen just a little smaller now. If you look down here, you can see April is actually really, really large. It's sitting down here, April 17th, which is this expiry right here. 49% of the gamma in the complex, the convexity in the complex, is coming from the April expiry, not the March expiry. So this is basically saying that there's a lot of calls out there, and 49% of that gamma is sitting in the April timeframe, not the March timeframe. Right underneath it is March. It's sitting at 30. So together, we've got 79% just in the March monthly MOPX and the April MOPX. So if you're starting to develop a thesis about what to do about oil and you're bullish on USO, you want to probably pay attention to this upper quadrant analysis, because this is telling you where the majority of the players are. And I'm going to tell you, the institutions don't screw around with Tuesday, Thursday, Wednesday crap. They are out there on the monthlies, and they are playing the monthlies. And so this is where the big boys and girls are sitting, and you probably want to pay attention to that. This helps you identify that trend and verify that trend just with a simple click. And that's how we use it at Gamma Edge. All right. With that said, let me check just the questions that we've got here. Suresh, I don't know if that helps you in business contact. I hope before we flip over to the SPX that this helps you understand how you could potentially use the web app to dissect literally what the market is doing on a particular stock that you're interested in. Great. Okay. So let's flip over real quick. I'm going to flip over here to this, the SPX, what we call the SPXP. We separate into the SPXP and the SPXA, right? So everyone, yes, the SPX is comprised of the AM settled complex that settles on the monthly. And then it also has the dailies, or what they call the weekly, the SPXW. So we created two symbols within Gamma Edge. One of them is called SPXP, what that represents the PM settled. Keep it easy. And we have the SPXA, which is the AM settled. Okay. They trade very differently. Okay. Why did we do this? This is something we did very early in our days, years and years and years ago. And we realized that when you aggregate them all together, and you can aggregate them together, we have the SPX here, and there's over 20.2 million contracts there. When you aggregate them together, you lose detail. Why is that? Well, you got 15.9 million contracts of the AMs right now, and you've got 3.6 million contracts of the PMs. The PMs actually move quick. They turn over incredibly fast. This is the vehicle of 0 DTE. Okay. Not saying that people don't play with the AMs. They do. We see it. But the PMs are what you want to pay attention to. And this is where the web app really starts to shine for what we're doing here. So when we click on the PMs here, and again, I've got everything turned on here, you can see it's all showing effectively the open interest from Friday. We won't get our open interest until the Monday, but the Greeks are real time. In fact, if I hit refresh here, this should point to 8 o'clock. Over the weekends, we update once an hour. During market hours, we're updating every minute. So we do a full Greek calculation on about 300 symbols every minute during market hours. So your data is going to be fresh during the day. To save money, we don't do it 24/7, 365 because there's no need, right? Spot price isn't changing. The only thing that's changing is time. So what are we looking at here? So we're looking at everything turned on in the SPX PM. What I like to do is I like to look at, first of all, the upper quadrant. This tells me where are the players, where are they situated. And as it turns out, remember what I said about, the strength of various days and, yada, yada, yada. Take a look. Monday, Wednesday, Friday. So sitting where we're sitting right now, Sunday night, right? Tuesday, Thursday are not in the upper quartile, the upper 25% of strength. These are going to turn over. So we have this question all the time. I want to do a weekly strategy in the SPX. You can do it. Absolutely. Do calendars, do your diagonals, do spreads, do whatever it is you want to do. But realize if you don't have what we call path continuity, that's where every one of the days are consecutive and are lit up from now until when your thesis is, you stand the chance of market behaviors overriding that 0 DTE, that 1 DTE, that 2 DTE, changing the overall status that we see here on the 10th. And if I add the 12th in there, you can see where we are. And there's a lot of red on the screen. Now, a lot can happen. We're in a very dynamic market situation right now, right? With everything that's going on in the Middle East. It is incredibly possible that if you say, hey, I'm just going to open up and I'm going to sell the Friday and long next Monday on a diagonal, that you're going to be risking a lot of change coming in on Tuesday and Thursday. So this particular, I personally would not do it. And this is how I would use this tool to kind of understand where are the big boys and girls, where are they sitting, how are they playing, and what would we do about something like that. Taking a look at the SPX, a lot of red, right? So the net delta column you can see is all magenta colored. It's my color scheme that I use. The default is a bright red. And basically what this is saying, and net delta is price sensitive. This is basically telling us that even though we have in the money calls that are below here, right, below the line, right, below spot price, we have in the money calls and out of the money puts. When we have net deltas that are sitting, that are red, the out of the money puts are dominant, period. So when we take a look, 70% of all of the open interest is concentrated in these expiries that you see here. 70% of the complex is telling you that the puts are really controlling the table here. Even though, as I go down further, we'll start to see a little bit of blues come in here at some point. Yeah, they're starting to come in here. And the reason they come in is because the puts have no value. They're so far out of the money, they don't really have a magnitude that we have to worry about. So basically, when we're in this kind of environment, from looking at the upper quadrant or upper quartile analysis, puts are running the table, and we expect, just due to the overhead, right? So if you're above the yellow line, in the money puts, out of the money calls, even though, yes, there are calls that are there, they're all decaying. So we have a lot of heaviness over us, and that's what this is telling us, right? We have dominant in the money puts over here, and we have dominant out of the money puts down here. So the environment is a put dominated gamma condition. Why does that matter? As price moves down, we disproportionately subtract deltas from the book. That's what this means. And when we take deltas out of the book and the market is inherently long, we effectively get a lot of volatility that comes out of that. So this is basically telling us we're in a put dominated environment, and negative deltas rule the table in that environment, and you should be thinking about that, accordingly. The other columns that we have here, we have gamma, of course, and then we have charm. Not shown on my screen is Vanna. And you can see I also don't have numbers with charm. I'm not really worried about the numbers. I'm worried about the shape. I'm worried about where do I have large pieces of structure sticking out like a sore thumb, either being supportive or being resistive. And that's how I use charm in my analysis. So I hope that gives you an idea how to use the web app to look through different forms of structures, expiries. I mean, we can look at Monday 0 DTE, and you can see it doesn't really change. It's still all put dominated. Maybe a few more calls starting to come in because they're in the money, right? They're over a 50 delta relative to the magnitude that we see here. We actually have some short interest down here. That's why this is negative down here. We've got some short interest sitting down at 66.75. So we have some known short puts that are sitting down there, like from a butterfly or spread or some other structure that came in that we were able to identify. So you occasionally get something like that, but in general, up and down, we're in a put dominated environment. All right. Taylor, back to you.
The only other comment, severely put dominated in the P2P strategy, only signaling exits or no entries. So again, it's another kind of environmental factor that not great right now with our signature scan of entries. So just more situational awareness out there.
Yeah, indeed. In fact, here, let me open this up here. Let me make this bigger so you can see it. So we have a strategy. Of course we do. It's got real money in it.
It's called hope, right? Isn't that our strategy?
Hope is not a strategy. It's a mechanical strategy. We've been running it since June 30th of 2023 with live money. A lot of people do this every day. We use end of day data. That's a nice thing about it. You don't have to be button seat to figure it out. You can come home from work. You can have dinner, kiss the dog, pat the wife, whatever the case may be, or vice versa. Kiss the dog, pat the husband, whatever, however you bounce. And then you can go look at Gamma Edge. And what this is telling us, right, this is basically as of the close on Friday, there are no stocks that are meeting criteria. Now, what does this mean? The list is 55 stocks that the universe that we pull from. These are high probability stocks that just behave well with this P trans, which is a level, to P gex, which I showed you the cyan bubble on positive gex. There are no stocks that are meeting the entry criteria. There are a lot of stocks that say get out. So they have actually crossed over PGEX. Now, it could be one of two reasons. I checked a lot of these over the weekend. It's because actually we've gone down so far, people are actually putting calls or monetizing calls or whatever the case may be. And they've come off the table a little bit. And so price is now above the PGEX level, and they've hit the list, right? So what's this mean? A lot of these stocks are time to boogie out of here. And what we're seeing here, BP was one that we took as a trade. And here's what we call the trade blotter. This is the one that one of our admins, Michael, runs. Here you go. Make this larger for you. And he's got two positions, one that was entered on February 12th, the other one that was entered just here earlier in the week. And we'll be taking those off the table. Now, these are stock-only positions. Win rate's really good. We're actually doing extremely well this year with the overall rates that we're seeing here and the win-loss. And even though the losses are a little bit higher, the count is lower. And when you do all the funny math that goes with expectancy and all that stuff, it comes out as a positive expectancy system. So roughly a 2-to-1 P to L, a little higher, a little lower, just depends on where we are in the cycle. But you can see we're still holding these and we're looking to get out of these. And it's mindless. We don't second guess it. We don't do anything with it except, the machine told us to do it. So you enter your trades and away you go. Now, to Taylor's point, going back here with no stocks here, all we're doing is freeing up cash and we're going to park it. Right. So if there's nothing to get into and we're taking money off the table, 2 positions is what Mike's going to be taking off in his portfolio. I'll be taking a few more off. I've got some other stuff that I'm dealing with. It is what it is, and that's the way it works. A lot of times these things will have you in cash for a while, which is great because when we start getting that short covering rally, then the buy list will explode. And you'll have to figure out, we have a way of helping you figure out which ones are doing what. And you take the trades and just go with it. So there you go, Taylor.
Yep. All good.
Yep.
Let's see here. I don't know. I don't have a ton else to talk about right now. Obviously, going to keep the time frame, continue to keep it tight with the action that we're seeing. So heavily lean on the intraday tools.
Yeah, absolutely. I think, just going back to the SPXP, just looking at, maybe I'll take Tuesday and Thursday off for the reasons we talked. So Monday, Wednesday, Friday right now. So we're just looking at, remember when we did the path continuity thing, even though Tuesday's not in there. When we just take a look at this rectangle that's up here, this is what we call Gex transition. Something unique to us here is that you can see we start to change colors above and below this box. There's a reason for it. There's a reason that it happens. And mathematically, we've been able to identify it and have been doing this for years, right? We've been doing this for, since 21, late 20. So this was basically telling us that we're really, really extended into put-dominated territory, right? So where are folks sitting right now? Well, when I aggregate these 3 together, they're sitting at 6,700. Okay, now, what did we say earlier? We said futures were at 66.19. I'm going to go on a different screen right now that I don't have. I got 66.24, 66.23 right now for the implied SPX using TradingView, right? So we're going to be down in some pretty deep territory, right? So let's go just down to where we're going to be. We're going to be down. If we hold in this particular area, we're going to be down in this particular area, right? This is evaluated with the spot price up here, and we're going to be opening down here. The first thing I do this every day in the SPX game plan, and if I'm not around, Taylor does it for us. One of the first things that we got to realize is that we are miles away from Kansas in context of if we open way down here. First of all, you can tell that with the open interest that we had, the market really hasn't had an opportunity to buy calls down here. You can see literally tens per strike, quantity tens per strike and that's aggregating across 3 expiries. Let me just make it tomorrow, just keep things simple. You can see some single digit calls down here. And that's because the market doesn't transact deep in the money calls. There's no convexity. Why would you do that, right? So they transact out of the money calls, and that's why you start seeing this stuff up here. By that same token, we have a lot of out of the money puts that are dominant here. Now, we do have some short strikes that I told you about. There was one sitting here at 66.75. Those folks are going to be kind of unhappy. There's another one sitting down here at 65.95. Those folks are going to be pretty unhappy, right? If we go down below that, right? If they become in the money, you can see there's been some short interest that has starting to pop through the structure due to participants actually putting something on, selling, oh, we're not going to go down there. I'll go ahead and, sell a PCS or whatever the case may be. Well, guess what? You do that in a volatile environment, although you get all the IV premium, the markets are implied or are high in volatility. And that's, we're going down there. We're going to challenge those short strikes tomorrow. Now, that's a whole different discussion. We're not going to get into it tonight, but let's just say we're going to open down in this area. There is short interest underneath us, right? When we start seeing that, these can become magnets. These can become areas for us to settle in. And we've done a lot of literature within the Discord, in the teaching channels about why short interest can become a pinning strike, a magnet. Gamma by itself is not a magnet. All right, so let's just get that out there. And I know that's going to rail against what a lot of people say. We don't care. There is no mechanism for gamma itself to be the magnet. It's charm. It's the decay or the appreciation of deltas, which forces you into a short strike, depending on if you're above and below it. We can show you. We've got lots of examples of it in the past. Now, why does it apply to this? Depending on what the OI update looks like in the morning, and this is going to be interesting, if we do see a lot of short interest down there, it's very, very possible we could get trapped down in this particular area for a while. And I wouldn't rule it off. It's from sitting here Sunday night. I'm not going to rule it off the table. It's very, very possible it could happen. So what to do? What do we do with this knowledge? Well, if you're not already long puts in the SPX, it's probably too late, right? You don't want to start buying insurance when your house is on fire. This is true point here. You wanted to buy when we were at a 14 handle or a 13 handle in the SPX and VIX, and we aren't there, right? So we're on the other side of that. So we're looking for evidence of when do we start seeing short rallies, short covering rallies. This is maybe the start of that setup. I'm not saying Monday is going to be a short covering rally, not at all. I'm saying when we start seeing short interest populate below us, that tends to slow price down because of that charm, that magnet effect that we start talking about. And people, because of fear and greed, they start stepping in. They see the stabilization in price, the drop in VIX a little bit. They see that as an opportunity to, oh, hey, this is the bottom. I'm going to call it, and I'm going to start opening calls. And then we start getting some balance in long calls coming into the structure. The nice thing about that is we'll be able to see that because we track all that. And we have tools to show you that during the day. Why that part's important is that becomes when we start looking at the overall status of the structure, we start seeing evidence of when those setups are potentially there. Let me pull a chart, which is the end of day Friday. Actually, let me just pull. I'm going to run a chart right now. It's going to take just a second because we are in off hours. So NetStat, SPX, P. I'm just going to run. This chart is going to give us a summary of kind of what you're seeing here on the web app, but it's going to break it down in a little simpler terms on who's winning the battle. Is Charm winning the battle? Is Vanna winning the battle? Is Gamma winning the battle? All of that. So we'll just give the mice a little bit of time here in their wheel to spit the information out. If you're in the Discord right now, you saw that I ran it in the NetStat channel. Here we go. I'm going to open it up on the screen. Here we go. All right, make it larger for you. Let's talk a little bit about this because this really tells us as the market evolves. We print this every 5 minutes. You can also run it at your leisure in the Discord if you'd like. We have a channel dedicated to this, the SPY, the Qs, and IWM that prints this every 5 minutes just so we can keep track of what's going on. It's spot price sensitive. All Greeks are spot price sensitive. Also, real-time IV also moves what you're looking at. So what are you looking at? How do you use this? I have a screen that's open during my trading day that I'm watching this and another tool that we have. So what are you looking at here? We have something that we call the LHP and the RHP, the left hand plane and the right hand plane. When we talk about the SPX, above is the right hand plane. And we have some 3D charts I'm not going to get into tonight because that'll take us in the weeds. But it's the right hand of where spot price is, the right side. And then the left side is the left hand plane, right? So that left hand plane, right hand plane is here. And this is just for tomorrow, by the way. This is just looking at tomorrow. When we are looking at this, one of the first things that comes to mind, and just looking at where, what's being printed here, is that we are dominant in the money puts in the right hand plane, the overhead, and we showed that, right? We're dominant puts. That's dominant deltas here, right? So if we look here, here's the net delta right across here, ITM puts. And that whole condition, this is the first order Greek, delta, right? Net delta. And then the second order Greeks, net charm, net gamma, and net vana. Why is any of this important? Well, when you do some of the funky math that we do, that we talk about, we can start looking at what's the balance between all of the options that are in the left-hand plane and all of the options that are in the right-hand plane, and start seeing, are we heavy? Are we going to see a rally? Whatever the case may be, are conditions right for a rally? All of that stuff. So the first thing that pops off here is net delta. Delta's king, right? Delta's risk. Delta is what is being hedged. Delta is delta is delta. If we weren't called gamma edge, we'd be called delta edge because delta is the name of the game. Heavy overhead inputs. These are all growing, right? That's the charm component, right? So overhead, we've got to lift a whole bunch of negative deltas. So if we want to go up, we're pushing against a charm wind, which actually is pretty balanced at this level, right? At this evaluated price. Now I could force the price. I'm not going to waste our time here tonight, but I can, in the command line, you can specify whatever price you want this thing evaluated at. But for the price that it took, which was the last in the database, you can see 119 and 116. Charm, we've got support below us. We've got this overhead. So by itself, time, charm, change in delta due to change in time, which is the definition of charm, is really kind of on the teeter-totter. We're really just kind of balanced here. So charm, there is no advantage tomorrow. Sitting here Sunday night at this price, there is no real advantage. What about gamma? Well, we already talked about gamma. We talked about gamma earlier. And we talked about it having basically a negative convexity, put dominance, all of that stuff. Here you go. Here's that put dominance. And it's just going to grow. The thing about gamma, think of a balloon. I want everyone to just look down at your keyboard right now and put your hands out like this. And between your hands is a balloon. And what you're going to do is you're going to squeeze that balloon. What happens to it? It gets taller. Right? That's what gamma does. As time gets closer to expiry, as you get shorter and shorter, the wings get closer and closer together, the magnitude of gamma gets multiplied. Where spot price is multiplies that. This is telling us that we're put dominated. So that magnification is just going to grow. And when you check these charts tomorrow, you're going to see these numbers are going to be a lot bigger because time is shorter to the 0 DTE. And then finally, look at Vana. Vana is sitting nearly balanced. So Sunday night, day before, fireworks tomorrow, with the new Ayatollah and the oil over 105 or 107 or whatever CL's printing at right now. VIX up near a 30 handle. The structure is balanced, but we're set to gap down below. So now you're on this teeter-totter and we're tilting it to the left side, to the left-hand plane. What do we know exists in the left-hand plane? Puts. What's that going to do relative to the right-hand plane? It's going to put all those puts, if we're balanced now and we slide to the left, we slide down the chain, we're forcing a whole bunch of puts in the money. What happens to deltas? Negative deltas skyrocket. So until we start seeing some stabilization in the structure tomorrow, volatility is going to be really, really high. So you might see puts getting monetized. That would be a stabilizing factor. We can watch that with our vol-M and vol-D commands. If we start seeing calls go in, we'll see that also with the vol-M, vol-D, and some of the spec P and spec PS commands. We'll know what the market is wanting to do, and we'll be able to play that. So, high-level view, you've got lots of nice tools to play with. You've got the dashboard. You've got NetStat, and then just due to time, we're not going to get into vol-M and vol-D and some of the other spec tools. But there's a lot of things that you can put together and help you understand what is the market doing against the structure that we have right now. And right now it's 67.43. The structure is really balanced, but net deltas are showing a real heavy overhead. So I'll leave it at that for right now. See, George, big up and down, move coming probably from 65.20, 6,500, going to be bombarded in tomorrow's opening, probably. Yeah. I don't know. Any other questions that I'm not catching there, Taylor?
I haven't seen any right now. I think we're all good.
All right. Well,
I don't have a ton else. I think just the one thing I'll say is for the avoidance of doubt, right? Especially if you're new to markets, higher volatility times, like Paul was saying. So cash is a position. Don't feel like you have to be trading tomorrow. Sit on your hands, wait for the fat pitch. Money saved is just as good as money earned sometimes. So, right. Yes, a lot of money can be made in these environments quickly, but it can be lost very quick as well. So, again, if you're not used to these fast markets, all that good stuff, there's zero shame at all in sitting out until we get kind of the next established uptrend, which if you ask anybody, that's where the easy money's made, not in this what could be high stress time. So that's that.
For sure.
Paul, are there any good options books out there?
It depends on what you want to do, right? I mean, yeah, of course.
It was a question, so business contact, I guess, if you want to specify if there's more something specific you want to understand regarding options more. Because, yeah, you could probably go down a rabbit hole with some super
Oh, my God.
stuff.
Yeah.
Nurtenberg's book or whatever it was called.
Yeah. Of course, all of the greats, before us, we stand on the shoulders of many great folks. I will say a lot of what we do at Gamma Edge is application centric, not theory centric. It's based in theory. We know the math. We can do math. We know it cold. So the books will certainly take you, through Black-Scholes and all of that. Very useful for at least just understanding. Frankly, come into Gamma Edge. We teach this. I think when most people come in, they know what delta is, or they've got a fairly good understanding of delta and what it means. So that's cool. Of course, everyone hears gamma, and gamma's sexy, and everybody wants gamma, and gamma this, gamma that, and whatever. Gamma's only a part of the solution. I showed you that NetStat table, right, which has got charm, and then we have Vanna, and she's a fickle woman. And we talk about Vanna and charm constantly because they also work to conspire to put either a headwind for us if we're trying to move in one direction, or they compensate and they overcome that headwind. That's what we teach. Now, if you come into G and you want to know the math, I can't show you, but over in that corner, I've got a good number of books that are applied. Everything from Excel books. Probably one of the better Excel books, if you want to just look it up, Simon Benga. You probably can't see it because of the blurry, but it's financial modeling. If you want a Black-Scholes model in Excel that you can start playing with and learning, this is where you're going to do that. You got a lot of coding ahead of you. I will tell you that right now. So if you're not a Visual Basic person, you might want to work with somebody who's Visual Basic, or let one of the AI models do it. That playing with that, and I refer back to this all the time when we're working with new folks who come in, because I just want to show them, what's the curve for gamma look like? What's charm look like? What's Vanna look like? And why does it matter? Why does any of this stuff matter? Why does it do what it does? Why do we have in the web app all those little bars? Well, it matters, right? And when you can kind of in the back of your mind look at what Simon Benega, he's passed away now, but when you look at what Simon Benega did and others, and you can have a model in Excel or a model in Python, and then say, I've got the OI surface. I've got known short interest there. That flips the sign on this stuff. Now I see where the magnet comes from. All of a sudden the light bulbs go off, and now you can start doing something with it. So we can get you going if you're interested. You got to work though. This is not as easy as stocks. If you're not going to put the work in, if you're looking for us just to tell you to buy this and sell that, I'm not going to do it.
I thought I could sell 16 Delta Strangles. Be good to go.
Oh, wait a second. I want to be like Captain Condor, and I want to. Never mind.
All right, awesome. Well, I think we're good there then. Not enough. We got much else. So, all right, awesome. Well, we'll catch y'all in the morning then. See where the markets are at.
Yep. I suspect this. I'm not sharing my screen anymore. Let's just go look at CL's up, right? CL's at 109.36. ES is down to 66.20. VIX is at a high right now. It's at 29.80, or VX, the futures, right, are at 29.84. We won't start getting a VIX print until 3:15 a.m. Eastern time, when the Euro markets start populating. So VIX cash, I suspect, since it closed at 29.49 or settled somewhere around there, is going to be north of probably a 32, 33 handle. Yeah. Buckle up, Buttercup. Cash is a position tomorrow. I'm probably just going to pop some popcorn and be done with it. Know your edge.
Indeed.
Know your edge. All right, buddy.
Yeah. All right, awesome. Appreciate the time, everyone. We'll see y'all tomorrow.
Thanks, everyone.